Hey everyone, welcome to the XRP market analysis for April 29th, 2026. You know what I've noticed? The market's been giving us some pretty mixed signals lately. Let's dive in and see what's really happening with our beloved XRP, shall we? Oh, before we start, this video is based on an AI-generated report, so please use it as reference only. And remember, investing is always your own responsibility. I'm just someone looking at the data, not a financial expert. All right, so here's where we stand right now. XRP is trading at $1.3837, and it's down 1.03% in the past 24 hours. Now, that might not sound like much, but, well, let's put it in context. We've been moving between a high of $1.3992 and a low of $1.3677 today on Binance, with about 53 million XRP traded. Here's the thing though, while we're seeing this small dip, XRP ETFs are actually pulling in $12.2 million in net inflows. That tells me institutions are still interested, even if the price doesn't show it right now. Now this is interesting. Let's talk technical indicators. The RSI is sitting at 45.83, which is pretty neutral territory. But here's where it gets a bit concerning. Our MACD is at 0.0102, and it's below the signal line at 0.0128. That's what we call a bearish divergence, and the histogram at minus 0.0027 confirms it. XRP is currently trading between the lower Bollinger Band at $1.3257 and the middle line at $1.4027, which, well, that's showing downward pressure. And get this, we're sitting about 24% below our 200-day moving average of $1.8153. That's quite a gap to fill. So what's happening in the bigger picture? Well, everyone's on edge, waiting for the Federal Reserve's rate decision. You know how it is. When the Fed speaks, the whole market listens. Bitcoin is struggling to hold that $76,000 support level. And when Bitcoin sneezes, altcoins catch a cold. The correlation numbers tell an interesting story too. XRP has a negative 0.1410 correlation with the dollar index, which means when the dollar gets stronger, XRP tends to weaken. Same thing with the S&P 500 at negative 0.1644. Here's some good news though. Ripple's been busy on the patent front. They're working on new patent strategies that could really challenge competitors who try to use XRP ledger technology. That's smart business right there. And get this, tokenized U.S. Treasuries on the XRP ledger just surged by $418 million. That's huge for adoption. Plus, with Australia's travel rule coming into effect in July and other regulatory frameworks being established globally, well, it's creating a much friendlier environment for compliance-focused companies like Ripple. Now, let's talk about market sentiment, and it's not pretty, folks. The Fear and Greed Index dropped to 26, which puts us firmly in fear territory. XRP search trends are also low at 26, showing people just aren't that interested right now. The FOMO spread is sitting at 0.0. That means speculative buying has completely disappeared. When I see numbers like these, it usually means we're in that phase where everyone's scared and nobody wants to buy. But you know what I've noticed? That's often when the best opportunities appear. Here's where things get really interesting though. Whale activity is through the roof. Out of almost 15,000 transactions, 725 were whale transactions. That's big money moving around. We're talking about 1.1 billion XRP moved by whales in just the past week. And here's the kicker. Binance's XRP supply scarcity index hit 0.75, the highest it's been since July 2024. When whales are moving coins, but exchange supply is getting scarce, well, that could set us up for some supply shortage down the road. From a technical pattern perspective, Elliott wave analysis suggests we're in a wave C correction phase. Using Wyckoff analysis, it looks like we're in phase A of a distribution stage. Now, I know that sounds scary, but here's the thing. This is often what happens after big gains. People take profits, prices redistribute, and then, if we're patient, a new upward cycle begins once this correction finishes. Okay, this is where it gets wild. The AI predictions are showing something I rarely see, a complete split between short-term and long-term forecasts. For tomorrow, it's predicting $0.9310 with an 83.2% probability of decline. That's a pretty dramatic drop, but wait. The 7-day prediction shows $1.8363 with 62.2% upward probability, and the 30-day forecast indicates $1.7060 with 76.9% upward probability. So we're looking at a potential V-shaped recovery pattern. Sharp drop, then strong bounce back. Now let me be honest about the risks here. The Fed decision could shake things up big time. If Bitcoin breaks below $76,000, that could create a domino effect. We've got 1.1 billion XRP that whales have been moving around. That could mean sell pressure. Market sentiment is pretty awful right now with that fear and greed index at 26 and that AI prediction of a drop to 93 cents. Even if it's just a model, that's something to keep in mind. So here's my overall take. I'm leaning toward gradual accumulation, but with a wait-and-see approach. Here's why this makes sense. First, that supply scarcity on exchanges is a real signal. Second, those medium and long-term AI predictions are actually pretty bullish. And third, the fundamentals with RWA tokenization and Ripple's patent strategy are genuinely strengthening. If I were positioning myself, I'd be looking at $1.20 to $1.25 as a primary entry zone. If that crazy AI prediction comes true, and we see 95 cents to $1, that could be an amazing additional buy opportunity. I'd set my stop loss around 85 cents, target the first bounce to $1.70 to $1.80, and if this really takes off, maybe $2.20 to $2.50 down the road. And that's it for today's analysis. Remember, markets can be unpredictable, so always do your own research and never invest more than you can afford to lose. If this was helpful, please subscribe and hit that like button. It really helps the channel grow. See you next time, and stay safe out there.